We are back with another stock review. Today's stock is Ford Motor Company, ticker symbol F, which, as I'm sure many of you know, is an automobile manufacturer who's currently worth $46.59 billion. I don't think I need to go into the company's strategy or background too much. We all know it's an automobile manufacturer, so I wanted to show off some of its major models and where it compares to the rest of the world. So with that, we can see that Ford controls the number one best-selling model in the United States, which is the Ford F-Series, which has sold 212,516 units so far in 2013. And by the way, this information comes from Kelley Blue Book and is from July 17th, 2023, so these numbers have increased quite a bit. If we compare Ford F-Series to the second closest model, the Chevrolet Silverado, we can see that it sold tens of thousands of units more. The Chevy Silverado's only sold 140,000 units compared to the over 210,000 by the Ford F-Series. Ford's second most popular vehicle model is the Ford Explorer, which has sold 46,000 units, and its Ford Escape, the slightly smaller SUV model, has sold roughly the same number of vehicles. If we move over into just EVs, we can see that Ford also has the third highest selling EV from 2022, which is the Ford Mustang Mach-E. Now these numbers, 39,458 units, is way smaller than what Tesla has sold in its top two models, the Model Y and Model 3. But the Mustang is a much younger model, and it is part of Ford's transition to a more electric future. And so I think seeing it as the number one non-Tesla car model to be sold is quite promising for the company. So that was a really quick overview of some of Ford's products. Now let's take a look at the financial numbers so we can see if this is a company that we want to invest in. Ford's revenue is a bit cyclical. As we can see, it had a cyclical low in 2020 during the pandemic recession, and it's continued to rebound and hit a recent high here in the trailing 12 months. So overall, looks okay. EBITDA has been all over the place as well, but rebounded nicely after the pandemic, although the trailing 12 months have fallen off a little bit since 2021 and 2022. Ford's operating earnings per share looks ugly, ranging from negative 49 cents per share in 2022 to positive $4.49 in 2021. I think the picture we're already starting to see is that there was a major dislocation in 2020, leading to a major windfall in 2021, and now some normalization and potential economic issues on the horizon that are going to show up in 2022 and the trailing 12 months. The company's gross margin fell substantially in 2020, rebounded quickly in 2021, but it has been falling ever since and is at a more normalized level of about 10 to 11%. Operating margins went negative in 2020 and still appear to be a little bit above pre-pandemic levels, which is good to see. Return on assets for all vehicle manufacturers tends to be very low, but 1 to 2% is still considered very low. And so to see Ford averaging return on assets somewhere between 0 and 1.5% is a little worrisome. The company's shares outstanding have fluctuated very, very slightly, but for all intents and purposes, we can consider their shares to be stable. Ford's cash and short-term investments on hand exploded following 2020 and 2021, and it's slowly been coming back down to normalized levels, but still remains high, which is good to see. The company needs a cash buffer, especially for any sort of recession-type scenario. Ford's long-term debt exploded in 2020, but they paid down quite a bit of it in 2021 before slowly ramping up their borrowing into the trailing 12 months. Personally, given the capital-intensive business that car manufacturing is, I'm not surprised to see this number going up, but I would like to see it go up as slowly as possible due to the rising interest rate environment. What does look a little bit better is that Ford's net interest expense has been getting less and less negative. We can assume part of this is due to the amount of money they're receiving from their cash on hand due to the higher interest rate environment, but hopefully some of this picture is also that their long-term debt is locked in at a historically low interest rate. Ford's free cash flow has been on a steady decline with the exception of 2021, which is a very worrying sight, especially since the trailing 12 months have been negative, and this number is probably going to get much worse due to the current strikes. With that said, due to some accounting stuff, we can see that their free cash flow per share is generally positive. So overall, I'd give the total free cash flow score like a C- or D+. Ford does pay a dividend, and they're known to cut that dividend quite substantially when they start to experience economic shocks. And this isn't necessarily a bad thing because it does save the company money. But we can see that it did drop significantly during the pandemic recession and bounced back up to the level it was at pre-pandemic at 60 cents per share. With that said, due to the company's fluctuating free cash flow, we can see that the company's dividend payout ratio is also extremely volatile, hitting over 5,000% in 2019 and currently sitting at 120% in the trailing 12 months, meaning Ford's dividend is probably not looking too safe. And finally, if we move to the value chart, we can see that Ford's fluctuating earnings make this very difficult to try and guess where a solid value for the company would be. But at a fair value PE of 15, we can see that the company would be worth $15.45, while it's currently sitting at $11.81. While you might think that Ford's PE of 11.3 is a good deal today, its projected compound annual growth rate is negative 4% per year for the next 5 years, meaning most analysts expect Ford to shrink as a company. For a company with absolutely zero growth prospects, I like to add a 10 PE as the fair PE, and we can see that Ford is now overpriced based on that, with a new fair value being closer to $10.30 per share. Now, I don't believe that Ford is going to shrink forever, but we're bound to see a negative economic cycle eventually, and that will definitely have a major effect on Ford as a company due to the highly cyclical nature of auto sales. So for my final thoughts, the first thing I really like about Ford is that it's an iconic brand. It has been around for an incredibly long period of time. Every American knows it. I would say most international people know what Ford is. And it has a brand recognizability that's really hard for most companies to replicate. Ford has also survived many, many market downturns. The company doesn't always come through more profitable or making more money for shareholders, but the company is very well versed in going through economic shocks. It's been through the Great Depression. It's been through the high inflation of the 70s. It's been through the great financial crisis, and it actually didn't take bailout money like other companies did. So Ford clearly knows how to weather the storm. It's just whether or not we as shareholders will be rewarded for it. And finally, I like that Ford is pivoting with consumer trends very well. I think this is evident in their EVs with the Mach-E Mustang, as well as their F-150 Lightning, and even their conventional vehicles like the new Ford Bronco, which I haven't talked about at all, but I think that one also really hits with consumer trends. Ford has pivoted to sticking to mostly SUVs, which at least in the American market is by far the most popular type of vehicle. So I think the company is making smart decisions to stay relevant to American consumers. What I do not like is that Ford is extremely exposed to economic conditions. Obviously, we all know that cars are a cyclical business because consumers have to be able to afford those cars. We also know that cars are at a peak in prices. They are ridiculously expensive. So any sort of downturn in the overall economy is going to lead to a major hit on Ford's bottom line. This makes it extremely difficult to predict cash flows for Ford because any sort of economic hit, even one that's out of nowhere that we can't see coming, is going to affect Ford. And so you can't make a simple assumption for Ford as a company as you could for other companies in the world like Adobe, let's say. And finally, I think that the best time to buy a car manufacturer like Ford is when we're in the depths of a recession. So when everybody knows we're in a recession and things just can't seem to find a bottom and they're falling, I think that is the time to really start looking at automakers and trying to figure out if you want to invest in them, because automakers will rebound if they're a strong company like Ford is, but there's really no telling just how well they will rebound and if they'll make money over the long term. I think automakers aren't really a long-term investment, but more of a short, buy it in the downturn of a recession and then sell it a few years later after the economy is recovering and things are expanding again. So those are my thoughts. Ford is absolutely a company I would love to buy, but under the right conditions. As I said, I would like to know that we're in a recession, and I would like to see everybody hitting the sell button before I would be interested in looking at Ford. What do you think? Do you think Ford is a good company? Do you like the direction the company is going? Are you a shareholder of Ford, or do you want to be? Let me know in the comments. And if you have a moment, please like and subscribe this video, as there's plenty more to come. Thanks, guys. Have a great night.